So, hi guys. It has been pretty long since we had any form of videos here and lectures. So I'm back. I'm back like I never left. I realize most of you are having issues understanding the charts, and I'm like, I need to explain certain things so you guys to help you guys get better at your trading game this year and moving forward. So my name again is Adeline, and I will be taking you guys on what is inducements, type of inducements, and all of that, explaining what this inducement is all about and how they can contribute to your trading game and your entries and all of that. Now, when we talk about inducement, we're talking about liquidity, right? Definitely, we heard the various type of liquidity. You always hear them mention inducement. But now there are various types of inducement. So I'm very sure you must have gone to your Idolo's chart. You see them marking different areas and it'll be like inducement here. They will just mark it as inducement. Now, inducement is that form of liquidity that's created, right? Either when price is close towards your zone and then it bounces back. That first tap, the price gets towards not the price also doesn't really need to get to your zone, but just close to your zone and rejects, right? That is what we call inducement, that price that gets rejected, right? And making market leave leftover money. That means market leaves liquidity in the market, right? It leaves leftover money that it needs to grab. So you have to have this at the back of your mind. When market wants to move, it will leave money behind. That money behind now makes it a reason for the market to do what? To come back to that zone. Once there is no money to grab, the market will not come back to the zone. So it will create different forms of what? Liquidity, leftover money. That's why you always hear people talk about inducements. So what I'm about to break down to you are the various type of inducement that you can literally now get to understand that inducement of our three different types, or let's say, or two different types. But if you combine those two, it makes them the third one. That's three different types. And that is what most people trade. And when you're marking your charts, try to mark the various types of liquidity that you spot. This will tell you the direction the market is about to take. If there's a sell side liquidity and there's a zone that has been on unmitigated zones, market will always go there as long as there is liquidity before that unmitigated zone. It has to wipe out those liquidity before getting to that zone. So you are marking out your sides liquidity. That means either your buy or sell side liquidity. You are marking out your inducements or your equalizers or your FVG. Markets will create all these things. So if you can map out all these things and make this a form of your setup, to make your setup an A plus setup, that will be excellent for you. So now let me explain what a leg inducement means. I'm very sure you must have seen people draw this on their charts, or I think it's here, and they will tell you, oh, they're waiting for price to come here. They'll mark one line, and you'll be like, what is this line that they're marking? Why are they marking this line? So let me explain to you. Normally, markets create structural flows, right? The higher highs, the higher lows. This is a high, this is a low, this is another high, this is another low, and this is another high, right? In most cases, this formation now is your perspective time frame. My literally is in your perspective time frame or your POI time frames. No, not really your POI time frames. Your perspective time frames or your internal time frames before your POI time frames. So you market will literally like you can see these things, this structural flow on different time frames, right? The market gets your perspective time frame. You're like, oh, market has pretty high highs, high lows. It's currently bullish. It's currently bearish. You see the structural flow. You're now marking out where is market going to come back to retrace to, likely to retrace to on your perspective time frame. We mark that as well. We go to your lower time frame, the medium time frame, right? our internal time frames. You go there, you check what is going on. You look at, is this a market structure flow? Oh, price is still going to continue its move towards the upside. So that means I have to catch a continuation move. You look for your setups. You mark your setups and everything on the time frames. You know where market is going to either fall back to. It's different. It depends on your time frames you are using. Could be your 1 hour time frame, your 15 minutes time frame, whatever you're looking out for. So now all this movement happening internally, there are candles formations happening here. So I'm going to do this. Okay, I think it's here. Yeah, internally, there are candle formations happening here in the lower time frames. Lower time frames, market is creating candles. In your perspective time frames could just be a very long candle, like long candles, but internally, in that long candle, we have another candles flowing through it, right? In that 4 hour time frame, if you expand it better, you likely will see a structural flow happening on 4 hours, giving you higher highs, higher lows, higher highs, higher lows, higher highs, right? Then go down to your 1 hour. In that 4 hours current trend happening on 4 hours, you see another drama happening, different structural flow. Now, here is how you now spot a leg inducement. Now, when you want to spot a leg inducement happens when market does something like this. The first markup, this is what market does. When market does something like this, breaks out this way, the pullback that happens before market takes off, right, becomes your inducement. A market does something like this and continue going back up. So that pullback that happens after the break of structure becomes your inducement. Now, this is what we now call a leg inducement. That's why you see your idolos when they were taking trades on Twitter or any platform you see them. In most cases, when you see them do things, like you're wondering why are they taking their entries from here? Is because every block that is beneath a liquidity spot that is unmitigated, market is likely going to go there, tap into it, and trigger. So it's indirectly saying, we have money here. There is money. There is available money here. The money is available here. And you, that you are not really conversant with liquidity, will go and be looking for putting your entry here. Let me draw a box. You'll be putting your entry somewhere here, right? Then your SL will now be somewhere around here. So let me get this done here. Your SL will now be somewhere around here. You will not put SL like this. The price will not kick you out. You will not say, market manipulation. Whereas your entry should have been somewhere here beneath the liquidity on the unmitigated order block. And your SL will be what? Beneath it. This is how I get most of my trades. On synthetic, crypto, and this is how I get most of my setups. Even though I know so many strategies, like I know what to use, I know what I want to work for me and cool. Right? This is what they do. This is another form of liquidity. Let me do this now on the sell side perspective. Let's go and do on the sell side. It's also leg inducements. But this time on the sell side, we have something like this, price giving us a higher high, a lower high, and then we have this low, and we have this breakout. Then price comes back up, taps, and moves down. This was after a break of structure, so I'm going to mark this so that you have this at the back of your mind. So now we have a break of structure. This pullback that happened immediately after price broke out. Now this pullback is not, it could just be weak. Like price could just break out and create weak. A week could just pull back and come down. That is inducement. It doesn't have to be full candles, a candle for a market and an inducement. It doesn't have to be. As long as a breakout has happened, be it with a wick, or be with a body of a candle, as long as the market has broken out of that zone, the pullback that happened immediately after the breakout is an inducement. Immediately after the breakout is an inducement. Most of the time, you could see this on your 4-hour time frame, and on your lower time frame, it is candles with wicks, right? Maybe a candle and wick, or double candles or with wicks. It's still an inducement. On your 4 hours, it should just be a long week after the breakout. On your 1 hour, the same thing, it could just be a long week after the breakout. Is it an inducement? That week that pulls back is still an inducement. If it's normal retracement, a candle does a normal retracement with a normal candle, body of a candle, and then it is a confirmed pullback without normal the candle week, is still an inducement as long as a breakout happened. As long as a breakout happened. That is what it means. So you have to always put this at the back of your mind. When you notice an unmitigated zone and there is liquidity around the unmitigated zone, target that unmitigated zones. As long as the liquidity has been untapped, the zone has been untapped. In most cases, you could see a fair value gap, adding that to your confluences. So I always tell people, if you don't see a fair value gap and you see a leftover liquidity untapped, it's still an A+ setup. That's the error we make. It's still an A+ setup. Now we'll move into the pullback inducement. This is where they tell you see traders talking about when price gets to your zone, you have to wait for market to create inducement first before you now take your entries. Mind you, these are just type of inducement, but they are also strategies. I'm literally teaching you a strategy you can use to trade and make smooth profits from the market. And make smooth profits, but you need to understand these core things to be profitable in the market. So now let's go and do what we call the pullback inducement. I've explained a leg inducement, and let's go and do what we call the pullback inducement. Pullback inducement is that scenario where price does a normal breakout and decides to now, once it gets into the zone a little bit or close to the zone, it pulls back and comes down and triggers. So this is the inducement being created. This is the inducement being created close to the zone. So when you see price gets towards your zone and it rejects, it's not as if price has left you totally. In most cases, price has not left you, depending on your time frames. That's why I'm always big on the higher time frame division. I tell everybody I know, focus on your higher time frames. It gets you where you are going more. If your higher time frame says this is an order block I'm going to react from, focus on that order block. Some people love to modify because they've understood their peer for clear entry. But as long as you know your zones, you know your time frames, focus on it. Don't do too much. Do not do too much. Right? This is what we call a pullback inducement. So price does a value break or structure the zone, gets close to the zone and reacts. In most cases, you could even see a fair value gap around there. So that's just something like a week. When we make that a fair value gap. Oh, sorry. Or let me just delete that. Let me just delete that. And just use this block as a fair value gap. So this could be a fair value gap across price to tap in and pull back. The price is still going to head to the zone. You know, the main thing I tell everybody is if you are trading any freaking beautiful, wonderful, sexy pair, if you are trading any pair like that, You need to know how your pair reacts when it gets to the zone. That's what gives you more confidence. You need to be smart. You need to be detailed. It needs to be detailed. It needs to be 100% detailed. When you marry a pair, you could marry 1, 2, 3, 4, 5, 6 pairs, but you need to know how your pair reacts when it gets towards the zone. Does it really like to tap into the zone, or it loves to go deep, 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 like 5 minutes or something? I tell my students to try and observe their pairs very well. That's just me, for me, for me. Do you get my point? Or you like to set limits. You can set limits on your trades and let it be, as long as you are sure of that zone. Because once price takes out a swing low, you know that the trend has shifted. But in scenarios like this is not a market structure shift. In most cases, you would think, oh, market has reacted towards my zone, then it went up, then it did not respect the zone. Like it went up like this and came down. Change of character. So the market has shifted for a sell. You will not be looking for sell around here. The market kicks you out. Why? Because it was still very much bullish. The swing highs, the swing lows had not been taken out. The swing lows was not taken out. For it to say, okay, market has shifted trend, right? The same thing with the other trend. So you have to put all the details I'm dropping, put them back of your head. So let's go for to all that the BOS so that you understand it better. And let me use the liquidity sign for this. Yeah, liquidity sign for that and change it to the bottom. Yeah. So that you can understand it. So this is what people tell you to do. This is why you get confused. Oh, market did not create in the liquidity here. You just tapped in. Why? This is what happens. So you need to be very cautious, be very smart, be very understanding, and figure out what works for you. These are just the two forms of liquidity most people change in the market. Some people wait for that inducement to happen. Once an inducement happens, they wait for price to get to their zone and they take their entry. They use this pullback inducement as a strong confirmation that there is a strong presence of whatever they are looking for, buy or sell, in that demand zone. However, in most cases, when we panic and buy, we see our market has triggered us out already. It's taking us out. Liquidity. Let me give you a scope. If this was happening on 4 hours, you're going to see a 15-minute shift. That 15-minute shift is going to play out. But on your 4 hours, it's an inducement. So market has not even left you. 1 15-minute shift is going like, it has left me. No. Go back to your main time frames, your POI time frames, or what they call it in the medium time frames, or internal time frames, the grammars other people call it. Anyways, go back to your time frames and check. As price got into my zone, no, I mean it's an inducement that's being played out. Market to create liquidity to grab. I'm repeating it again. Either it leaves liquidity indirectly behind, or if there's no form of liquidity for it to take out, it is going to create its liquidity. That's what we call the pullback. The liquidity that gets created around your zone, so that price will come and take it out and continue its movement towards upside. That is it. Shikena. So I'm going to play this out on the sell side. The same thing, we have like a break of structure here. Price breaks out, price comes towards the zone, price pulls back, and price what? Comes in. Am I making an error? No. Yeah. Sorry, I made an error here. Yes. Sorry, it's meant to be this. Meant to be like this. Yep. Yeah. And price gets close to the zone, it pulls back. So we have an inducement being created here. So many people do not explain this, but I felt it is quite needed for me to explain it because a lot of you get confused on the charts. And it's important that you understand this markup properly. Very, 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 very important that you get to understand this markup. Go to your chart, you play it out. When you see that price is close to your zone, price starts to reject, an inducement is being played out, it's likely to come back to your zone when it's ready to take it out. Do not panic. Do not panic. It will take you, I will not lie to you, but it's going to take you time to master this thing. You can pick any format to trade in the market, any of them, and you will still be profitable. The funniest thing about pullback inducement is you would be impatient. You won't even know when it has happened because that's the deceit about pullback inducement is that you won't even know. It makes you panic. But when you mark out a leg inducement, you are confident. There is no panic. There is no panic. You can just set a limit and say, okay, this is the leg inducement, this is a break of structure, this is a pullback. So price is coming to take out this inducement. So people even use fair value gaps, and sometimes inducement happens around the fair value gap. When price gets to that inducement spot like this, that fair value gap, it just starts to trigger and to start buying and later to come back and come back to your other block. Or like, you know, gold likes to romance more sometimes when it's catching continuation around fair value gaps sometimes. And sometimes it will come back to the zone and take it out. Because that liquidity has been created close to the zone. It has not tapped the zone. So it will take, first of all, take out the fair value gap money and go. Then to come back again, when not break out, just come back again, take out the liquidity and tap into the zone properly and take off. This is what you need to have at the back of your mind. This is a pullback inducement. Now, when we now talk about pullback, leg inducement plus pullback inducement, this is what we're saying. Price does something like this, a breakout. We have this, after price breaks out, there's a quick inducement to be taken out. The price breaks out properly again, gets close to the zone. You have something like this. The price what? Taps in and triggers. So we have two things involved now. We had a break of structure here. Then we had an inducement created here. Then we have a block. Another block here. Then we also had this inducement that happened here. This is why most of the time we chop stop losses and we think it's market manipulation. So we have these three layouts. We had a break of structure confirmation happened. Then we had our strong confirmation, which was an inducement. And we had another block, which made it an A+ setup. But before price triggered this other block, it first of all tapped the leftover money out. That's the inducement here. I'll just type this leg inducement out. Took it out first and pulled back. Took out the pullback what? Inducement. I went straight into the zone. And it took off. This is what we literally call a leg plus pullback inducement. Shikana. That is it. But the consistency, when you are consistent with the chart and you get to understand market structure play out, trust me, once you get to understand structure, You get to understand different types of liquidity. All of these things, you don't need to know too much, but when you get to understand them by consistent studying, the chart becomes clearer, clearer, the confidence becomes better, 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 right? So I hope with this explanation of mine, breaking down the types of inducement for you has somehow given you a form of confidence that your strategy is not wrong. This is a strategy. This is a strategy. This is a strategy. And they happen on all time frames. Just pick your time frames. Pick your time frames. Pick the time frame that you want to observe the trend. And you stay more profitable when you are following a continuation trend. You are joining in the continuation of the trend. That is why you see folks stay profitable when they trade continuation models with this method. They use this same method to focus strictly on the trend. The reason why you get hit with stop losses is because you are going against the trend. And if you are going against the trend trading like this, you're not going to be profitable as long run. It just looks like you're just hitting the brick wall consistently. So you need to have that at the back of your mind. So I hope with this video of mine, I've been able to help you get better. If you have questions, drop them in the comments below. Also, we have a registration for our monthly masterclass, or let's say mentorship sections. It's strictly for advanced traders. So if you're someone who wants to learn more advanced trade and the advanced trading markets, advanced strategy, I want to join the trading class, it's just $75. And it comes with a full course and a certificate and class assessment. So if you sign up for it on time, we'll be kicking off first week of October. Yeah, first week of October, you could join. Also, I want to also chip this in. I currently run a Signal community, which is not like a regular Signal community that I'm inviting folks to join. It's not free, but the link and everything you need to know is going to be in the bio. So also check out my description, the bio of this video or description of this video. Every detail is going to be posted there. Now, let me give you a breakdown of how this Signal community works. Now, this is not a Signal community where I just dropping TPSL, TPSL, TPSL. No, this is a Signal community for people who want to make money off trading and also outside of trading. Different means of you making money. We're adding a lot of nuggets for people who see themselves as people who really want to make money, who want to make millions on the market and establish themselves financially. Just by building a kind of concept different from the regular trading people we see. And we noticed that people don't have this opportunity. So here is what we did. First of all, you get signals on Forex trading. You get signals on crypto trades. Yeah. You get signals on synthetic. 3 different markets. Forex, synthetic, and crypto one. You get a full course, a full trading course that helps me and other traders get better at trading. You get my personal synthetic trading course. Yes, you get it all for free. Personal synthetic trading course, a full Forex course that can help you get better understanding markets from beginners to advanced. They're all beginners to advanced. You are getting this course for free. You get to ask me questions live because we're doing live analysis together. So you get to ask me questions and I get to educate you. So it's more like you are joining a mentorship community. Apart from us dropping signals for you, are going to be having sections at least once or twice a week. We'll be having psychological sections, lecture sections. If you want me to answer trading questions and maybe you're having confusions that relates to what I do, how I trade, and the course itself, not outside the course, not somebody else's strategy, because you are learning how to trade in that community and also making money for yourself from our trades. Now, here is the juicy part about this thing. Now, apart from making money from our signals, you also have an opportunity to learn investment plans, the proper way to invest your money, and how to make more money for yourself through investing. You learn a smart saving plan, how to properly save your money, that your savings will also be making money for you. So you're literally learning that method to how to save properly. You learn how to open offshore accounts. We've partnered with wonderful banks that can allow you open accounts for them, overseas accounts, not our bank accounts in Nigeria. So you learn how to open those accounts. You link you up with the best bank that can help you and put you through. So these are kind of few things that we're putting on board. There are other skills that you can actually learn. We put them in the community for people who want to learn other skills, referrals and all of that. We partner with some mentors who give you discounts on their courses. So they discount on these courses that you can get. You learn how to either content creating, marketing, SEO, digital skills that can put you on board. You can have access to that. The reason why is that we want people to make money from trading, but also make money outside trading. Let their money be working for them. The smart money method. That is the community we are building. We realize that people do not have this. People do not understand that there are different ways you can make money aside from trading that can add money into your account every month, every day. You get paid dividend from stock. You get paid interest from your savings. These methods are great. So as a trader, it is not going to be fair for you to trade and just be spending money on fancy things and those monies are not working for you. Let your money work for you. Money that you don't feel like spending. We will teach you every smart financial method at which you can use to survive. Because by next, in 2026, guys, tax are going to drain you out. So if you don't have a smart financial way or knowledge or how to manage money, how to make more with the little you have or the little you're making from financial markets, you're going to get burnt out consistently. There's a lot of updates and stuff like that we're dropping in the community. And if you want to be a part of this, it is just a monthly subscription fee. Currently, we are giving out a discount, about 20% discount. Instead of paying 100K monthly to access this community, to access these details, to make money with us, we're saying you get access to this community for the low 20% discount of those 80,000 naira, and you get other extra free nuggets. Every detail you need to get, every detail you need to know about this community is going to be in the description below. So if you're interested, you can click on the link in the description and join, sign up and join. Let's all make money, let's plan, let's work together. There's a whole lot I'm offering to the community. And also, don't forget, if you want to join our masterclass for the month of October, advanced trading class for the month of October, the link is also in my bio. It's just $75. You can sign up for that. I will teach you the proper strategy you can use to make money for yourself. And I hope this video again helped you get better. If you have any questions, drop them in the comments below. Thank you, guys.